Okay, you and me, we need to talk. And not the, hey, can I borrow your lawnmower kind of talk. The why is the dollar acting like a discount balloon this morning after the party while Bitcoin is sprinting up Everest in flip-flops kind of talk. So stick around for the next few minutes and I'm going to show you the wildest money plot twist that I've seen since someone actually tried to pay for coffee with Dogecoin back in 2014. So picture this, it's 7 a.m. in blazing hot Dubai. I'm bleary-eyed pouring what can only be described as defensive coffee when a friend pings me with a headline. Dollar index nears 2021 lows as Bitcoin rockets to new all-time high. Now, my first thoughts, sure, and I'm secretly Batman, right? Now, except of course the chart is right there, the DXY, right? The DXY sliding like it's on a slope-covered, at least a soap-covered ski slope. Wow, that's a mouthful without your coffee in the morning. While of course Bitcoin's candle sprint touches 123,000. Now, there's more zeros than my sleep schedule can handle. Now, you might shrug. Currencies move, no biggie, but hold on, right? The US federal deficit just clocked $316 billion in a single month. Now that's the third largest crater of red ink in American history. Imagine ordering a pizza and getting an invoice for a private island. Suddenly, every portfolio manager from Boston to Bangalore is panicking, yelling, "Where's my inflation hedge?" Right? Gold used to be the go-to, but these days gold's still shining, but Bitcoin is fireworks in a very dark sky. Okay, quick pit stop right here. Now, if you're kind of scratching your head halfway through this saga, jump into our free educational Discord server. The link is in the description. It's kind of where we untangle charts, we share memes, and debate whether pineapple belongs on trading strategies. Spoiler, it does not, but it comes, you can come and argue with me if you want. It doesn't. All right, let's get back to the chaos-loving greenback then, right? The dollar index has dropped by about 11% in half a year. That's 11. Now, that's the financial equivalent of forgetting your anniversary. Twice, and still expecting dinner to be ready. It won't be, trust me. As the kind of dollar wheezes here, Bitcoin laughs, up 15 grand since July 3rd. Then the US House rubber stamps President Trump's famously oversized big beautiful bill. Who names these things? I don't know. Anyway, meanwhile, the broader crypto market ballooned by a cool $1 trillion in 90 days. You can almost hear Warren Buffett grinding his teeth. But here is the kicker that made me choke on my espresso. The S&P 500 measured against Bitcoin is already down 15% this year. Zoom out to the 2012 and you're staring at a 99.98% drop. That's not a typo, it's actually a museum piece. Stocks versus Satoshis, right? Let's just say that the stock market looks like a VHS tape next to Bitcoin's hologram. But before we ride deeper into this rabbit hole, this one might just shock you, but I'm not a financial advisor and nothing in this video is financial advice. Cryptocurrencies are highly volatile and you could lose all of the money that you invest. It's important that you do your own research and you consult a qualified professional. After all, your investments are entirely your responsibility and you should know that nothing is ever guaranteed when it comes to investing. Neither I, this channel, nor YouTube are liable for any losses. And this video today is for entertainment and educational purposes only. So there you go, Mum, I delivered the disclaimer. So, institutions. Remember how they once called Bitcoin magic internet beans? And yeah, about that. BlackRock's spot Bitcoin ETF, ticker IBIT, well, that just hoovered up more than $83 billion in under a year. The biggest gold ETF, GLD, needed 15 years to hit that number. So if Wall Street were a high school cafeteria, Bitcoin just snagged the captain's seat and gold stuck swapping stories about the good old days. Even Michael Saylor is still buying sats like a kid collecting Pokemon cards. Family offices, hedge funds, well, they're queuing faster than concert goers chasing Taylor Swift tickets. And because I like kind of making life easy, I snagged up my own sats on Kraken Pro. Yes, that is an affiliate link that supports the channel in the description. And yes, it pays my coffee and caffeine bill while keeping these uploads free for you. So let's just press pause and peek at the psychology, right? For decades, right, we've been told treasury bonds are risk-free. Yet here we are. Yields are rising, deficits are soaring, dollars are drifting, while Bitcoin eats their lunch and posts the selfie on X. Now, you've got the 𝗗𝗶𝘀𝗰𝗍 kind of letter called it crisis mode. I call it what happens when your economic boat has too many leaks and a shiny orange lifeboat floats on by. Story time. Last week, I needed to wire rent money. Right? The bank website was slower than dial-up internet. Fees looked like restaurant tips in Manhattan, minimum 50%. And settlement took 2 business days. That is pretty much New York in a bit of in a summary, right? Because everything cost you a fortune, including the tip, and the service just wasn't there. Anyway, a buddy kind of zipped me Bitcoin from Tokyo in 11 minutes for pennies. Now that's kind of when the light bulb flickers, right? Maybe the real risk isn't Bitcoin's volatility. Maybe it's the real risk is actually clinging to a system that bills you like the taxi driver stuck in traffic. Are you still skeptical? Fair enough. Let's kind of weigh the numbers then, right? Since April 9th, when the White House paused tariffs for 90 days, Bitcoin outpaced gold, stock, and even Italian espresso futures. Okay, I made that last one up, but you get the idea, right? Investors fleeing the buck pumped both Bitcoin and the bullion. But Bitcoin sprinted harder, and if you graph the DXY versus Bitcoin since 2021, the lines look like 2 magnets pushing each other away. Dollar plummets, Bitcoin soars. Now, I'm not claiming that Bitcoin will moon forever, right? Scary dips will happen. Trolls will scream, "Told you so," and your phone will buzz at 3 a.m. with liquidation memes, of course. Yet, consider this. Every time that regulators or politicians thaw shade, right, or at least throw shade out there, right, Bitcoin dusts kind of itself off like Rocky Balboa and comes back swinging. So remember the China mining ban of 2021. Hash rates recovered. Remember the 2022 bear market, right? We're 4x those lows. And it's almost as if any anti kind of fragility kind of is baked into the code itself. Meanwhile, of course, BTC ETFs have already grabbed 70% of the gold ETF inflows year to date. That's not a typo either. That's a tectonic shift. So picture a seesaw with gold on one side, Bitcoin on the other, and Wall Street's billion-dollar briefcases are piling on the orange side. Eventually, the golden child might still shine, but it's clearly sharing the spotlight. Now, let's weave in some human drama for added effect here. Institutions love buzzwords like portfolio diversification, yet often cling to nostalgic models, right? Markowitz, modern portfolio theory. Born in the 1950s, Elvis was still alive, people, right? We stream music in lossless audio now, right? Maybe our portfolios deserve a framework or a firmware kind of upgrade too. Adding a smidge of BTC has historically juiced risk-adjusted returns. That's not my opinion. That is just kind of crunch the sharp ratios, right? Now, one contradiction that kind of wrecked me here is that gold bugs kind of say Bitcoin's digital gold and thus too similar to bother kind of holding both, right? Stock loyalists, they say that Bitcoin's just too exotic. And it's funny how both camps dismiss the same asset for opposite reasons, right? It makes me wonder, or makes you wonder, I guess, who is actually skating on thin ice here. But let's go ahead and zoom out to the dollar once again, right? Currency power comes down to confidence. And when deficits balloon, then central banks print, well, confidence leaks quickly, at least quicker than air from a party balloon on a cactus day, right? Bitcoin, with its kind of capped 21 million supply, it offers an alien concept: programmed scarcity. It's kind of like discovering a vending machine that refuses to print extra candy just because you tapped more please. And unlike gold, where more can be discovered, I mean, there's a comet out there with more gold than on planet Earth, right? It would destroy the scarcity of gold and the value would disappear overnight. Now, I promise personal flavor in these videos, so here are my favorite kind of trivial side quests of the week. I tried buying a vintage vinyl copy of Pink Floyd's Dark Side of the Moon using BTC. Now, the seller, some hipster in Berlin, laughed, of course. Only Bitcoin or Monero, my friend. Now, that's right. The counterculture music collector wanted the counterculture money. Now, my bank card never actually stood a chance here. The transaction cleared before the chorus of Time It Finish playing, right? Now, talk about poetic. Okay, rapid fire stats barrage. Stay with me. Federal deficit May 2025, $316 billion. The DXY 6-month slide, 11%. Bitcoin's July 14 price, $123,000, up $15,000 since July 3rd. S&P 500 versus BTC year to date, 15% down, right? IBIT autumn, right? $83 billion in 1 year. BTC ETF's share of gold ETF inflows 2025, 70%. Now, numbers, they don't tell the whole story, but they scream loud enough to wake up the neighbors. Now, another Kraken Pro moment here, right? I laddered buys during a mini dip July 7th. Thanks again to everyone who has clicked the affiliate link in the description. It does, of course, keep the lights on, the mic handy, and the questionable jokes, well, yeah, I guess graciously kind of tolerant, maybe. Yeah, you can comment down below how you feel about the jokes. Okay, let's steer into kind of macro again, right? Classic safe haven asset that have always kind of been at least physical, right? Land, art, shiny metals. But digital narratives are flipping the script here, right? The very same generation that shops on phones, works remotely, and games in virtual worlds demands a borderless store of value. Now, Bitcoin, it fits that glove like, well, O.J. Simpson's glove, except this one actually fits. And yet, there's a hard truth. Bitcoin's adoption means, you know, shouldering volatility, right? Prices can belly flop 30% while you're in your kind of at least line for groceries, right? The question isn't, will it be smooth, but is the risk-reward ratio still asymmetrical enough to actually justify the ride? And historically, yes. Future, that's for you to decide. Okay, let's spice things up with an anecdote because, hell, it wouldn't be one of my videos if I didn't do this. So, I met an old school commodities trader. Now he scoffs, digital coins have no yield. I counter, neither does gold unless you lease it. Yet your firm stores tons of it. He pauses, then whispers, we're exploring a 2% BTC allocation. Don't quote me. Oops. Too late. So relax, right? I changed his name for the protection of the sheepish, of course. Meanwhile, bearish bets on Ethereum hint at a short squeeze. Why? Because when everyone leans bearish, the market tends to yank the rug upwards, right? Picture a bunch of campers roasting marshmallows and one kid pulls the stick, flames everywhere, and it's just chaos, right? Someone's eyebrows gonna get singed. Now that's a short squeeze. Could ETH moon? Maybe. Could it nosedive? Also probable. And maybe, I guess, you know. It depends on what kind of camp you sit with Ethereum. In my opinion, Ethereum is your Blockbuster, it's your Nokia, it's your BlackBerry, you know, it's your Yahoo. It isn't necessarily going to completely disappear, but it's first mover advantage. Anyway, could that uncertainty actually fuel big orange coins narrative as, you know, the comparative kind of grandfather of crypto store value? It's ironic given its age of 16 years. But the protagonist tonight is still, of course, Bitcoin. Investors kind of treating it like, digital shelter from monetary storms may push prices towards, or at least targets towards 140k, 150k. Home stretch, if DXY revisits the 2012 lows, while safe haven demand could blast Bitcoin far beyond models like the stock to flow ever predicted. So let me wrap up this kind of yarn neatly then, right? The dollar's slipping on banana peels here, right? Deficits are ballooning and asset managers are discovering FOMO is a 5-letter word, Bitcoin, right? Now, the next decade, it won't look like the last, and maybe you'll grab a slice of that orange pie. Maybe you're going to ride gold's timeless glow. Maybe you're going to camp out in a cash reserve and just hope. Now, my goal here is to serve the map, the snacks, and the compass. If you want the journey or that journey with conversations, analysis, and terrible kind of puns, then hop into the free Discord. The description or the link is in the description down below, right? And if you appreciate the late night research marathons, using my Kraken Pro affiliate link does keep the coffee hot and the charts flowing. So for now, tap subscribe so you don't miss the next crypto plot twist. And why don't you check out that video that's queuing up on the screen right now.